It's 2 p.m. Hi, everyone. Hi, good afternoon. I think we have quite a few people already on, so I think we can get started. Let me share my screen first. Okay, cool. Okay, I assume everyone can see my screen. Yep, so welcome everyone to our webinar for this Saturday afternoon. We haven't really had any webinars since early this year. So I think it's good that we start to engage with our existing investors as well as potential investors that are interested in our investment product. So I see we have quite a few people on. I also recognize some names as some of our existing investors. So welcome. And for the new participants, also welcome. Nice to meet you. My name is Kachun, and I'm the investor relations manager at CapBay. Yeah. So today, I'm going to talk about what is P2p financing and how can it help you weather the storm, and how it can contribute to your overall investment portfolio. Okay, so without further ado, let's get started. Okay, so I split the webinar today into 4 sections. So first, I'm going to start telling you a bit about our company, if you don't already know. Then I will tell you about our investment products. And finally, I will take you to the heart of the webinar, where we will actually help you guide you through the process of registering and investing on our P2P platform. At any point in time, if you have any questions, feel free to submit your questions in the Q&A section of Zoom, or even on Facebook. For those of you watching on Facebook, you may also submit your questions there, and my colleagues will either answer them or I will take it up later in the webinar. Okay. So CapBay, the CapBay was founded in 2016, and since then we've gone a long way. So we've funded about 1.2 billion ringgit across our group, and over 13,000 transactions across 700 SMEs in more than 20 different industries. And while doing so, we also maintain our 0% financing loss, and while garnering about 8 to 10% net returns per annum for our investors. So why we actually managed to maintain our 0 to no default rate, I will go into that more later, into our supply chain finance methodology. Okay, so yeah, since 2016, we've won multiple awards. And we won the Banker's Choice Awards in 2018. We participated in various startup business races like the Hong Leong Launchpad, Plug and Play. And one of our most notable awards is the ASAT Asian Awards 2020. Okay, moving on. Yeah, so we actually obtained our P2P financing license from the Securities Commission in May 2019. We are the second batch of P2P platforms. I think the first batch was earlier in 2017. And we actually officially launched the platform early last year on February 2020. So it's been about a little over 1.5 years now. Yeah, so over the 1.5 years, we've actually managed to achieve to become the #1 P2P platform in Malaysia with the lowest default rate, while having the largest financing volume in 2021 in terms of financing amount. So just some statistics, and these are cumulative data as at July 2021. We've funded about 336 million ringgit across over 1,500 notes, while maintaining our 0% default rate even throughout COVID. And on average, the average net returns we've garnered for investors are 8.5% per annum. And these returns are after deducting our service fees. And this is just also a breakdown of our the industries that we finance. Okay, so I just gave a really brief overview of CapBay as a company. So let me on this slide, I'm going to go into firstly, what is P2P financing? And then what CapBay specializes in for those that don't know. But for those that don't already invest on our platform, this is just a refresher course as well for you into what you're actually investing in. Okay, so I'm going to start with the first layer. So what is P2P? So P2P is a form of crowdfunding that allows investors to directly fund SMEs. So this is very different from equity crowdfunding, where you actually purchase an equity stake in the company. So that equity crowdfunding has a much longer term horizon, and you're not certain when you actually receive your not just returns, but even your initial capital. Whereas in P2P financing, you're actually providing financing to these companies, so SMEs in this case, and based on the agreement, the predetermined interest rate, you will receive your capital and the returns. Let's say if the tenure is 6 months, you receive it after 6 months, or if it's a monthly financing for 1 year, you will receive your capital and principal plus interest in monthly installments. So it depends on the financing product. So that is what P2P financing is in general. So that is mostly as you can see on my screen, the left-hand side. So the investor, which are you guys, and the SME, which is the companies that need financing. And CapBay is the platform that facilitates this process. So in CapBay, we actually introduced a third party here, which is a larger company, a corporate buyer. So I'm just going to paint a very simple example and scenario. So let's say the SME, they are like a cleaning company, let's say, and they supply their cleaning services to a larger MNC or public listed company. Let's say it's like Petronas. So they complete their contract, they provide all the services, and then they will issue an invoice to Petronas. But then some of these larger companies, they have their own payment terms. Sometimes it's 1 month, 3 months, or even as long as 6 months. So they will only repay the invoice to the SME after their payment terms. But then these SMEs, they have their own working capital requirements. They need to pay their staff salary, they need to pay their rent. So that's where we come in, CapBay. We come and provide financing to these SMEs based on the value of the invoice issued to the corporate buyer. And obviously, from this case, you can see that the repayment risk is considerably lower compared to you're just providing like a clean financing without any security or whatnot to a SME. In this case, you're actually leveraging the repayment risk of the corporate buyer. So let's say Petronas in this case. And in our most secure form of invoice financing, which is notified invoice financing, the corporate buyer actually makes the repayment directly to CapBay. And also there's another form where they actually repay the SME first. But even in that case, we have measures in place like a virtual or lockbox account where we will collect the repayment from the SME. So this is what actually contributes to our 0 to none default rate throughout the years. Yeah. Okay. So that's about it for CapBay and what is P2P financing. I'm just going to pause here and start a poll so I can try to gauge from the audience like whether I need to go into more detail about P2P financing later. Okay, I'm going to launch the poll. Okay, I'm going to just pause for a few minutes and let everyone answer. You should be able to see it on your Zoom interface. You can let us know in the chat as well if you do not see it. Okay, great. Almost half of you guys have answered. Yep, so wow, okay, very good participation. I think around at least half of the participants are existing investors, and the other half are I guess retail investors that have not invested in P2P. So yeah, if you have any more questions about how P2P financing works, and firstly, you can always shoot some questions in the Q&A, or you can always contact us after the webinar. Okay, I think that's gonna give another 5 to 10 seconds. Okay, cool. I'm going to end the poll here. Thank you, everyone, for answering the poll. Okay, I think I've got a lot of data on your concerns and everything. All right, so moving on, I'm going to talk a bit about about overall portfolio diversification and how CapBay P2P financing can have a place in your overall investment portfolio, to give you more context as well. Okay, so I'm sure a lot of you have invested in at least one of these, whether it be at fixed deposits, bonds, equities, property, unit trusts, mutual funds, and whatnot, right? So I guess the key thing I wanted to highlight here is the importance of diversification, not just within, let's say, if you invest in stocks, not just diversifying with let's say 5, 10, 20 different stocks, but diversifying across different asset classes as well, to ensure to reduce the overall correlation in your total investment portfolio. For example, if for someone that really believed in the property market and they put all their savings and investment and invested solely in the property market, let's say 5 years ago, then firstly, you would realize that at least for the recent years, property market has not been doing so well, pretty stagnant, and COVID did not make it better. So firstly, all your money is locked up in a very illiquid asset. And although yes, it's pretty safe, you have the hard property there, but if let's say you manage to, instead of buying such an expensive house, you bought it's like a cheaper condo, let's say, and then the remainder you diversify into different asset classes, like let's say from mutual funds, fixed deposits, even equities for that matter. Although, yeah, and even equities, yeah, depends whether it's the local market, the US market, but you could have missed out on some potential returns there. So that's why it's important to actually have a holistic view of your entire investment portfolio and not just focus on one asset class. Okay, moving on, I'm just going to give a brief comparison of the main asset classes that most investors look at. So firstly, let's look at real estate. The returns are pretty variable. Yeah, it's firstly, the capital appreciation is dependent on the property market, the house, and also the rental market for the rental yield. The risk is relatively lower, although not completely, not completely risk-free like FD. And liquidity-wise, it's really inflexible. Firstly, to actually sell your property, it takes months. Firstly, let's say you need to engage a property agent, find the right buyer, and even after then, there's a lot of legal paperwork involved. Now, moving on to bonds, another point I didn't really highlight in the slide is bonds in Malaysia are not really accessible to the run-of-the-mill retail investor. Usually the minimum investment sizes for most corporate bonds are like, in the thousands or 100,000s lah. So it's a pretty high barrier to entry there. The returns can be fixed or variable depending on the terms. The risk also is low to medium depending on the bond rating. That's like AAA all the way down. And liquidity wise also is pretty inflexible. Now moving to equities, which I'm sure most investors look at. Returns are obviously variable. They go up and down with the stock market. Risk as well can be pretty high especially if you invest in like penny stocks or like, even our own local market, as you can see in the chart below, like there was like quite high volatility throughout last year, throughout COVID, right? And whereas liquidity-wise, it's really flexible. You can buy and sell stocks anytime during market trading hours. Now, bringing in comparison with our P2P financing, the returns are fixed. So if you provide financing to an SME, there will be a predetermined interest rate. Let's say it's 8% per annum. So depending on the tenure, after 6 months, you will receive your capital plus the 8%. The price or the amount that you invested, there is no like capital appreciation or whatnot. Yeah. The risk-wise, it can be low to high. It depends. So, for example, there's so many P2P platforms out there with very different financing products. And I guess for CapBay, we are positioned on the lower side and also, I guess, slightly low returns, because you trade, there's a risk-reward ratio there. And so it depends. You need to see the type of the financing product you're invested in. Maybe you have to look at the investment memo and make sure even within P2P financing, you are well diversified to further reduce risk. On top of that, liquidity-wise, it's relatively flexible, at least for CapBay, because the tenures of our investment notes are only up to 6 months. Yeah, we don't, at least for like 95% of our investment notes, because it's all this mostly invoice financing, like I mentioned earlier. So the graph below just illustrates, it's just a rough illustration of the returns you could have gotten. Let's say if you invested in CapBay P2P at the start of last year, compared to, let's say, the benchmarking, the KLCI. Well, obviously, even between asset classes, it's good to diversify. So let's say, imagine if you split into half, then you would still manage to have some returns even after 1.5 years. Whereas, yeah, depending on the stocks you invested in, yeah, it can be pretty volatile and you wouldn't have that like fixed income buffer there. Okay, yeah, so now I'm going to dive deep more into CapBay P2P and some of our investment specific financing products. But before that, I'm just going to pause and look at the Q&A section to answer some questions. Okay, so the first question is, are you still having 0% default rate as of today? So yeah, as of today, as of like August 28th, our default rate is still at 0%, yes. Okay, and then there's another question from Justine So regarding the tax treatment for P2P income in Malaysia. Yeah, so in Malaysia currently, the interest they receive from P2P investments is taxable. You as investors are responsible to declare it on your income during your income tax filing every year. Obviously, every year, P2P platforms, we would try to push for the government for some incentives and try to have some tax deductions for the P2P interest income. But so far, nothing yet. But let's hope there are some benefits from the government soon. But currently, yeah, so P2P interest in Malaysia is taxable. Okay, so just looking at some questions from Ravindran in the chat. How is the long-term outlook of P2P investments? I guess it depends. Let me see. It depends, like long-term outlook of. So I guess the P2P industry in general, we are slowly moving towards we are maturing as an industry, although it only started like 4 years ago in 2017. Starting to look at how different platforms handle defaults and their own credit risk methodology. So year by year, we are coming up with new investment products So hopefully, yes, over the P2P investment is looking to improve with time. Other than that, is the interest fixed or flexible? So the interest is fixed. The interest rate doesn't change after you are invested in it. It's fixed. How to join and what is the minimum investment required? Okay, on how to register, I'm going to get to that in the getting started section. And the minimum investment to start on our investment platform is 10,000 ringgit. So yes, it is the highest among the other P2P platforms. But then it's because we are positioned as a more premium P2P financing platform, and also 10,000 ringgit is what we believe is to provide for sufficient diversification for investors. And can we view in real time on the investment progress? Yes, definitely. So we have a mobile app, and you can even access our platform on your computer web browser. Okay, I think there's 2 more questions. Let me see. Okay, how are you positioned amongst your competitors? So yeah, like I said, we are positioned to be more lower risk and a shorter tenure than our main competitors. Yeah. Okay, besides that, are the notes mainly focused on Malaysia? Yes. Currently, we only finance SMEs in Malaysia. Operations are only based in Malaysia. Plans for other countries, not in the near future yet. Yeah, not yet. Okay. Any news on the CapBay Plus campaign? Yeah, I'll get to that later on some of our ongoing campaigns. Okay, I think I'm going to pause on the Q&As first and continue with the presentation. All right. Moving on. Yeah, so these are just some key figures. Yeah, so this on the left is just a snapshot of our performance over the second quarter of 2021. We funded about 123 million ringgit across over 500 notes, while maintaining at least above around 8 to 9% returns per annum, net of fees. And yeah, so still 0 defaults, as I mentioned earlier. Our key differentiating factors are short tenures. Our tenures are usually up to 6 months, so offering greater liquidity for investors. The risk is actually comparable to corporate bonds. So in the example I gave earlier, or let's say Petronas was like the corporate buyer, imagine because you're leveraging the risk of Petronas like repaying their obligations, right? So it's similar to if Petronas issues a corporate bond and they have to make their coupon payments on the bond. Yeah. Besides that, safer buyers, yeah, like I mentioned earlier, and we have recourse to sellers. So even if we have this arrangement where we leverage the risk of the corporate buyer, we actually have an agreement with the SME. So even if the corporate buyer for some reason they are too late in their repayment or they decide not to repay, we actually can go after the SME and collect repayment from them. Besides that, we have our first in market auto invest profiles for investors, which I will dive into later in another slide. Okay, yeah, so these are the programs, 3 programs we have for our investment notes. It's split into 3. So I'm going to start with the first one, Diversify. Notes under Diversify are high risk but have high returns in general. They have the lower risk ratings of D and E. Tenures for all programs are up to 6 months in general. And the risk is slightly higher than the other notes as well. But with higher risk, you would have high returns as well. So you have net returns up to 10% per annum. On top of that, besides that, we have our flagship program, which is Select. So it's our carefully curated notes with lower risk and also slightly lower returns. The risk rating is from A+ to C, and net returns are usually up to 8% per annum. And last but not least, we have CapBay Assure. So this is our newest program. We've made some announcements recently on this program, so some of you may be familiar, but for those that have not heard of CapBay Assure, it's basically our newest product where we actually have a guarantee fund to protect investors from defaults. So we will actually guarantee the principal and interest for notes issued under this program. So it's our safest program, but with lower net returns as well. It's up to 6% per annum. So how does CapBay Assured actually work? So we actually appoint a guarantee company to maintain a reserve fund, and that is designed to pay off the investors in the event an issuer defaults. So this is done by, like, you can see the diagram on the top. The guarantee company will actually purchase the relevant investment note from affected investors and assign the rights of the defaulting note to the guarantee company. So obviously this is not 100% risk-free like an FD. It's all subject to the availability of the reserve fund. So as you can see on the bottom right diagram, we actually maintain a coverage ratio of at least 8%. So what this means in general, it means we actually committed to protect all investment notes under this program up to a default rate of 8%. Yeah, so even though our default rate is at 0% now, we just want to offer this new product for investors that are for more risk-averse investors. It's like another layer of protection. Yeah. We recently launched this program last month actually. Yeah, so and we've seen quite a lot of demand from investors in this low interest rate environment. Okay, so now I'm just going to talk about our auto invest program. So how it works is very, very simple. Our auto invest is the simplest among the other P2P platforms in the industry. So it's very simple. You just deposit your cash. Let's say it's 50,000 or 10,000, which is the minimum. You just have to select a profile based on your risk appetite. So we have conservative, moderate, and aggressive. So what's different about these profiles is they're just different. They have different limits or configurations of the previous 3 programs these 3 programs. So for example, aggressive would have a higher allocation, will allow for a higher allocation in diversified notes for higher returns, whereas conservative will have a lower, will allow for a lower limit for notes under diversified. So it's very simple. You just select a profile and then the auto invest will run from there. Your portfolio will be gradually allocated to the various investment notes that will be launched on our platform. So your 10,000 ringgit, let's say, will not be immediately invested. It will be gradually diversified because that's what we prioritize as well. If you don't want to invest, because you also can manually invest on our platform into individual notes that you're interested in, but imagine investing your entire 10,000 ringgit into a single note, and let's say for some reason that note does indeed go into default and you lose your capital, then your entire 10,000 ringgit will be lost. Whereas if it's diversified into, let's say, 20, 30, or 50 notes, it would reduce some of your returns, but at least your entire capital is preserved. So that's why diversification is very important, not just among asset classes, but within each asset class, like I mentioned, diversifying across different stocks, let's say. So the auto invest program will keep running until you actually turn it off by unselecting the profile. And then if let's say you want to eventually withdraw your capital, you just turn it off, wait for all the investment notes that you have invested in to mature, and then gradually withdraw your cash from there. Okay, so I'm going to go deeper into why our notes are so safe. So we actually have an in-house credit team that leverages huge amounts of data. We look at more than 2,000 data points for each transaction, including counterparty risk, and relationship stability. So this means we actually look more at historical trade data. Unlike banks that usually zoom in into a company's balance sheet, we look at the historical trade data because that's what we specialize in. We specialize in supply chain financing. So even though an SME has a very strong paymaster, their customer is a very big company, but if their trade data shows that even though they're a very big company, they have a very bad track record of like paying on time, and they so that would affect our credit assessment as well. We also look at concentration risks in terms of industry and business trend. So for example, throughout COVID, like we obviously try to stay away from like the hospitality industry. And throughout COVID, we actually maintain our credit threshold because we want to make sure that the quality of our investment notes are still there. Yeah, we want to maintain our low risk, the low risk profile of all our investment notes. And at the bottom here is just some key eligibility criteria for the businesses applying for financing. So firstly, they have to be Malaysian registered and majority owned by Malaysians, operating for more than 1 year, and they have to have mid to large size corporates as customers, and have an annual revenue of more than 2 million ringgit. So these are just some of the basic criteria for issuers that we finance on our platform. So on top of that, we actually have strong partnerships with vendors such as TM, where we actually partner with them for a vendor financing program. And so it's just an example of so we actually can finance TMs like TM suppliers as TM as the ultimate paymaster. So obviously in this case, you can see it's pretty safe. We also partner with like MyTukar to offer dealer financing. So dealer financing is a special product where we actually finance used car dealers on their purchases of vehicles on the second-hand car auction. On these notes, we actually have filed ownership claims with JPJ on those cars. So it's pretty secure in that sense. In the event those default, we can actually liquidate the vehicle on the secondary market and recover the capital for investors. We also have a JV with Kenanga Capital Islamic, which is obviously to grow our government factoring business and provide Shara compliant financing as well. So these partnerships are what contribute to the opportunity, the investment notes and opportunities on our platform, and why they are relatively safer. Okay, I've gone through a lot about P2P and specifically on CapBay P2P financing products. So I'm going to pause here before I go through on how new investors can actually get started on our platform. But before that, I'm going to pause to take some questions. Okay. Okay, so the first one of the question is, what is the size of the investment? So I guess the minimum initial deposit is 10,000 ringgit. From there, the minimum deposit gradually is the minimum incremental deposit is 1,000 ringgit. But then in terms of the auto invest, your 10,000 will be allocated to the different investment notes, right? So each allocation will differ. We have allocation limits in place to ensure sufficient diversification across all our issuers. So it could be as low as a few hundred ringgit or up to a few thousand ringgit, depending on the size of your portfolio, because our allocation limits are based on a percentage of your portfolio. Yes, let me see. Okay. One question is, should there be a default? Can the default be claimed as expenses or losses on our tax filing? Currently, no, not yet. But hopefully there will be changes to this soon, but no. Okay. Will the default rate stay at 0% all the time? No, I mean, obviously we cannot guarantee we can maintain our default rate forever. That's why it's important that our auto invest helps investors diversify the portfolio across as many notes as possible. Yep. Okay. Okay, I think one quite good question here. So what is the duration of interest of our investment notes? Is it yearly or monthly? Okay, so most of our investment notes are all on a bullet repayment basis. So that means the full principal plus interest will be paid upon maturity. Let's say it's 3 months, it'll be paid after 3 months. If the maturity is 6 months, then after 6 months. Yeah, we do have some notes available for manual invest currently that is they have longer tenures and are monthly installments. So you can view all this, like the repayment terms and all, on our platform. When an investment note is launched, you can view the investment memo. You can see whether it's a bullet repayment or a monthly repayment, and look at the tenure and all as well. Okay, current one question: would we be able to exit your notes if we need some liquidity? Currently, no. So once your portfolio is allocated or invested into a note, you will not be able to withdraw that amount. You need to wait for the investment note to mature because the money has already been provided, given to the SME, and you just need to wait for the SME to make the repayment. Okay. Let's see. I think they have a question on a CapBay Assured. So how do we know the reserve fund falls below the coverage ratio? Yeah, so we will update that on our website. And also, firstly, we would suspend the program. We won't issue any more investment notes until the coverage ratio recovers to at least 8%. So that's how we ensure the reserve fund is sufficient to protect investors. Okay, when can investor download both quarterly and annual statements? Investors can already. It's just that obviously if you're a new investor and you just registered, you will not be able, you will only be able to download your first quarterly statement in the next quarter and your first annual statement next year. Yeah, so you can download the quarterly and annual statements on our platform. Okay. Another question, must I maintain a minimum of 10,000 for the auto invest to remain active? Yes. So yeah, you need to maintain the minimum portfolio size of 10,000 ringgit for the auto invest to keep on running. Okay, we have quite a lot of questions, so I'm going to move on first, and then we will end it off with a final Q&A at the end. Okay? Yeah. In the meantime, keep the questions coming. And if I'm going too fast also, yeah, you can always slow me down. Okay, sorry. Yeah. Okay, so for new investors, how to get started? It's very simple. You just have to register an account with us. Really, I think it's easier to do it on your mobile phone, and deposit the minimum of 10,000. Just select one of the auto invest profiles, and then that's all. You can just watch your portfolio gradually get allocated, and you can watch your investments grow from there. Okay, so how to register? We usually recommend our investors to download the mobile app on your mobile phone because firstly, you will need to snap a front and back photo of your IC, as well as there will be a video selfie KYC portion for us to perform the eKYC on our investors. Also good to have your bank account details ready. Yeah, so it's very simple. Just follow the step-by-steps during the registration. It should take no longer than 5 to 10 minutes, and then you'll be set from there. Yeah, so this is just some screenshots of our app interface. So you can go to the Invest Now section, where firstly, you can deposit your funds. So currently, investors will have to make a bank transfer to our designated trustee account, and then submit the proof of payment. We have FPX in the works, so that should be available for our investors soon. In the same Invest Now section, you will also be able to select your auto invest profile or go to new opportunities and manually invest in individual notes. And do note, yeah, the minimum amount to start investing on CapBay is 10,000 ringgit. Yeah, so for new investors, that are keen and have not registered on our platform, we have a special gift for you today. Just remember to input the promo code CAPWEB2108 during the registration. So it's actually on the first page here. Yeah, just put in the promo code there, And then after fulfilling the basic requirements, which are depositing the minimum of 10,000 ringgit and selecting one of the auto invest profiles, you will receive your 100 ringgit bonus within 30 days. Yep, simple as that. Special for new investors, but not to worry, for our existing investors, we still have our ongoing campaigns, which firstly is our friends referral program. If you refer a friend, okay, firstly, you have to be a qualified investor on our platform with a portfolio of at least 10,000 ringgit. If you refer one of your friends with you will be able to see your unique referral code in your account on the platform. They have registered with that referral code. Both you and your friend will receive 100 ringgit if they fulfill the same requirements as this. Basically, just 10,000 ringgit deposit and auto invest profile. Easy. On top of that, we still have CapBay Plus. So we are planning to, it's actually ending in the end of September, where we're planning to extend this campaign. So what it is basically, it's just a bonus for our investors in case the auto invest allocates your funds too slow. We will give an extra bonus on your undeployed cash, up to 1.7% per annum on your idle cash. Yep, so these are our ongoing campaigns. Okay, I guess now we can move on to the Q&A session. But before I answer your questions, I'm just going to go through just a few of the key, most commonly asked questions from investors. So firstly, what are the risks involved? So obviously, I remember there was another question on the 0% default rate. Yeah, so obviously, there are risks involved in investing wherever it is, whether you invest in stocks, if a property or whatnot, right? So in P2P investing, the risk is if the company or the issuer, they default on the investment note. So to manage that risk, firstly, I think I mentioned this a few times already, diversification with our auto invest. Secondly, it's also good to understand the financing product that you're investing in. So you can read the investment memo. And actually, you also have the option of opting out of an investment note, even with your auto invest on, if for some reason you are not comfortable with being allocated to that investment note. Yeah, so you can do that on our platform. What are the fees incurred? So we have no deposit, zero deposit or withdrawal fees. Yeah, so we don't charge investors for any of that. The only fees associated is firstly the service fees on our investment notes, which is range 10 to 30%, 10 to 30% of the interest portion. So for example, if the gross interest is 10%, and then our service fee for that particular product is 30%, your net return would be 7% per annum. Yeah, just a rough example, because the service fees across our products, they vary. Yeah. And how long does it take to process the deposits and withdrawals? For deposits, it takes 1 working day. So if you deposit, let's say today, it'll be processed by this coming Monday. Withdrawals take a bit longer. It takes 3 to 5 working days because we actually need to instruct our trustee to perform the withdrawals. Okay. I'm going to pause here and do a final round of answering your Q&A. Okay. Let me see. Okay. Question from Kevin. When I look at the performance tab in the app, what is the other income make up of in addition to the profit received? So other income here, it includes firstly the referral bonus or any other bonuses or campaigns we have, and also which includes CapBay Plus. Yeah. Okay. On allocation limits, is it possible for investors to set the limits manually for each note instead of auto? So currently, no. But we've been hearing a lot of feedback from investors to actually implement that. So that would be that could come soon in the future as well. But currently, no. Investors will not be able to set the limits manually. Okay. Okay, I'm gonna answer a few questions here from Mr. Kogilan. Yeah, so unsure about charges. Yeah, so as I meant, I hope I answered it earlier. The charges is 10 to 30% of the interest on the interest portion of each investment note. So we don't charge anything upfront unless we manage to recover the repayment for investors. So yeah, and to view and now on our app we made it easier for investors. You just see the net return after deducting our service fee, so you don't need to like deduct it by yourself. But if you do want to see the breakdown, we have it. You can view the investment memo, and also it's stated clearly on the transaction tab as well. The maturity term for initial deposits, it depends on the notes that you are invested in. Some could be 3 months, some could be 6 months. So it's good to have an overall view of your portfolio. You can view that on the platform, the mobile app as well, under the portfolio section. Is the investment compounding? So it's not monthly compounding like some platforms. Because most of our investment notes, like I mentioned earlier, are bullet repayments. So they'll be paid in full upon maturity. But I guess if it's a 3-month tenure, then it would be reinvested there and it will compound there, but it won't be like a monthly compounding kind of thing. Okay, some of these are questions I've already answered. Yeah, so once allocated, you are not able to withdraw. Yeah, as I mentioned, you just need to wait for the maturity, the tenure to finish. Let's see. For the CapBay Plus, yes. So interest is for the CapBay Plus campaign. Interest is actually calculated on a daily basis and it's prorated accordingly. It will be paid out every quarter. Yeah. Yeah. One question. So CapBay decides to grant extension to some notes. Is there any late payment charges? So yeah, so for notes that have been granted extension, we will continue charging the interest based on the effective tenure. So investors will be still be entitled to the late interest that's being accrued there. Okay. One question about our returns. It seems to have decreased from 12 to 13% to now this around 8 to 9%. Yeah, so it's because previously we were displaying our gross returns before deducting service fees. So now it's easier for us to we've had a lot of feedback from investors and they want to see more of the net returns. So that's what we're showing now. So what we're showing now is the same. The returns range is still the same. It's just now we're showing net instead of gross. Okay. Okay, there's a question on default. How long will we be able to claim back the investment amount if there's a default? So if an investment does default, it would depend on when we actually manage to recover it. So as soon as we recover whatever amount, we would obviously distribute it back to investors. Okay, there are quite a lot of questions here. Okay, let me move on to the Facebook Q&As. Thanks, Keshav. Yep, so will the names of the companies be disclosed? No, so we will not disclose the names of the issuers on our platform as with the other P2P platforms. CapBay is not insured under PIDM. We are not a financial institution, and this is not an FD. So please, investors do need to be aware of the risks involved. Okay. Some of these questions I've already answered, so I'm not going to repeat, I guess. Tenure up to 6 months, meaning to say the shortest tenure or lock-in period. So I guess it's not a very straightforward lock-in period like a FD. Let's say you invest 10,000 in FD, in let's say it's a 6-month FD. Then after 6 months, you will get back your money. This case, I guess if you did invest in a single investment note and the tenure is 6 months, then yes, you will receive your money back in 6 months. But then since we are encouraging diversification with our auto invest, you'll be like invested into like various notes, like 30 or 50 different notes, all have different tenures. So the repayment will be very staggered. But if your auto invest is on, whenever the repayment comes in, it will be automatically reinvested. So your interest will compound. But if you don't want that, you just want to see, like, if you just want to see it's all invested one shot and want to start withdrawing capital, you just have to turn off your auto invest and we will stop reinvesting for you. Okay, one more question. Can you elaborate more on your recovery process? Okay, so for the recovery process, we have, firstly, we would, although we haven't had the default yet, we have our in-house recovery team that is in charge of the recovery process. So firstly, some of the measures we would take is we would negotiate with the issuer. We may try to restructure the investment note to allow for a more, how to say, a more suitable repayment plan for the issuer, depending on their situation and depending on what we are comfortable with. Because it's obviously in our interest to protect investors as well. So we may extend the tenure, or we may secure investors with more collateral, or in, like, for example, the used car, the dealer financing notes, where we finance used car dealers, we would actually enforce on the security, take ownership of the car and liquidate it on the second-hand car market. Yep. Okay. Oops, sorry. Yeah, so in case I missed out any of your questions today, because we have a lot, yeah, so firstly, you can always email us at iSupport if you're a new or existing investor, if you have any questions, or you can always contact us at this phone number here, and one of our relationship managers will get back to you. Yeah, so I'm just going to run through the Q&As to see if I missed out any that are not duplicates. Yeah, so regarding the upgrading our auto invest to allow for more flexibility, well, because currently when we designed it in response to the other platforms where you can set various parameters, but we wanted to simplify it for the investor, because sometimes we wanted to simplify the user journey basically. But since we are receiving and we're going to monitor the feedback from investors and what they prefer, there will be plans to gradually improve the auto invest mechanism. Okay. Okay. So how long will it take to deploy a 50,000 ringgit investment, assuming you're interested to top up? Okay, so on average, whether it's 50K or 100K, it may take up to 2 to 4 weeks or more, depending on the volume of investment notes on our platform. Because of the allocation limits we have in place, we want to make sure that your portfolio, like your 50K or 100K, is not overly concentrated into a single issuer. So it's a balance that we are trying to maintain here between utilization of the funds as well as diversification. Because if we want to deploy your funds as quickly as possible, yeah, technically we can. You don't have limits in place and just deploy your funds into as much of your funds as possible into a single issuer, right? But the concentration risk there would be really, really high. And obviously we don't want that for investors. Yeah. Okay, I think some of these are the same. Okay, there's one question. Would you say P2P is highly correlated to bonds? In terms of risk, I wouldn't say it's correlated to bonds, because unless for some reason the bond issuer is a related company to the transaction. And firstly, in terms of correlation to the overall market, it's different as well. As you saw earlier in the graph with the KLCI, fixed income, since P2P is a fixed income asset, right? It is uncorrelated with overall market volatility. So where it fits in your overall investment portfolio, it should fit in your fixed income portion of your investment portfolio. Obviously, I'm not in the place to actually comment on your exact allocation percentage-wise, but it definitely has a place in your investment portfolio as a fixed income asset. Okay, another answer. Okay, I'm just gonna answer. Okay, looks there's only one or two more minutes. Okay, I'm going to take the last few questions. From Ellen Tan, are returns guaranteed? No, only in Assure, in the CapBay Assure, we guarantee it subject to the availability of the reserve fund. But obviously the returns in general are not guaranteed because this is not an active. Okay, another question on sorry, I have a lot of questions I need to filter out. I think there was a question on withdrawals. Yeah, so you can withdraw the whatever. So in your portfolio, on your account, you can see like the amount invested. Let's say you have like 2,000. Let's say you have like 8,000 ringgit invested and 2,000 ringgit in cash. But currently on our app now, you can actually see a portion that's split between cash and CapBay Plus. Whatever amount there is actually cash. Just CapBay Plus is just the portion where we actually provide some bonus returns. So let's say you have 2,000 ringgit in cash and 8,000 in invested. You can withdraw your 2,000 ringgit anytime. You can withdraw it then. But the 8,000 ringgit that's invested, you cannot withdraw because that's already been distributed to the issuers, and you need to wait for the investment to mature and for the repayment to be done. Okay, CapBay, another question on CapBay Assure. It's not at 8%, CapBay Assure is up to 6%, and that is net. So net of service fees. So all the returns are actually quoted throughout the webinar that are actually net after deducting service fees. Yeah. Okay, I think I'm gonna stop here because it's almost 3 p.m. and don't want to take up too much more of your Saturday afternoon. So if I missed out any of the questions, I really apologize. But firstly, feel free to email or WhatsApp or call us on this email and phone number here. We will obviously answer you in due time. And firstly, for the investors that have not registered on our platform, do remember to put in the promo code CapWeb2108 when you register. And yeah, so after fulfilling the requirements, you will receive your 100 ringgit bonus. Also, don't forget to like our socials on Facebook, Instagram, Twitter, LinkedIn. Yeah, and to follow us for if you have any new products and updates for our investors. Okay, without further ado, thank you everyone for joining us on our webinar today. Hope you learned something new about P2P financing in general or about CapBay. Yeah, so I'll see you all in the next webinar. Thank you.